Hey everybody, happy Sunday. If you are in Australia or Asia, happy Monday. So, a lot to cover today. This is the event where I answer all your top questions for the week. And it's funny, every single week has a certain theme of what people are thinking about. And this one's all about FOMO, it's about allocations, it's about price predictions, it's psychology, you name it. But the good news is LFG normally buys on Sunday. And I think LFG is ready to drop another $125 million in Bitcoin. Or is Michael Saylor getting ready to punch? I think LFG definitely is. And who's going to jump into the market first? And that will propel Bitcoin above 48K. You heard it here first, ladies and gentlemen. I make very bold predictions because I have extreme spidey senses. No, I'm kidding. But I do think that's going to happen. And just looking at patterns and everything else, I believe it's very possible. So let's just jump in. We have a lot of ground to cover today. 50 slides to try and dispel all of your questions. Big thank you to the moderators out there. Let's jump in. Let's not waste any time. Math, money, and freedom, and edutainment. None of this ever is financial advice. I want to spend 1 second. I share what I do. I share what I see. I teach you guys how to research and gals how to do research. Do not ever say, you said this, you said that, you told us to do this. I would never do that. And there's no such thing as a sure thing. And I always say, all last year, keep your tap dancing shoes on because everything changes every single minute of every day. And investing is a blood sport. Now that that's out of the way, let's go. First question. This is one from Shine Your Inner Light. I love the Metaverse price prediction you made in yesterday's video. Quickie for Bitcoin. Can you do it for SOL and ETH? Yes, I can. So for those who missed yesterday's show, Quickie is the 10-minute segment, which ended up being more than 20 minutes yesterday because there was so much to cover. But this was the model I shared based on the Bank of America Metaverse valuation target of 13 trillion. I thought it would be interesting to analysis of if the metaverse was worth 13 trillion, what would Bitcoin be worth? And the answer is about 15.5 million, which is about 3 million more than Breedlove's 2032 target, which I backed into with a model. So it's all theoretically possible. But again, the red alerts there are, these are not price predictions, these are theoretical models. Now, in terms of where Sol and Ethereum could go to, so if Bitcoin goes to 46K, 46K today, if it goes to 15.5 million, Ethereum would go to about $1.17 million and Solana would go to about $45,000. Now, the most important thing to note here is if this does happen, again, flashing siren lights, these are theoretical models, but using those price predictions, Bitcoin would have an approximate market cap of 217 trillion. It's said by many that the amount of money printing that the Fed will have to do will be about 200 trillion by the year 2030. So it is very, very possible for the Fed money printing to equate to the market cap of Bitcoin. So you can back into it and justify. The Ethereum market cap would be 140 trillion. Again, if this does hold out, it means that it hasn't flipped Bitcoin yet. And the Solana sandbagged price prediction would mean it only has a 20 trillion market cap. But remember, trillions of dollars debasing at 15% per year with an accelerated money printing schedule, your dollar won't be worth that much. Again, measure everything in Bitcoin. So thanks for the question. Next question is from Salim. I want to allocate 5 to 7% of my crypto budget to high risk, high reward plays with unique technology. Thoughts, suggestions? So everybody wants this. This is kind of like degen. First of all, I jump into a couple of points. 98% of crypto are cash grabs and slow-moving Ponzi schemes. No doubt about it, okay? You got to be in the 2%. Now, if you do want to do this, make sure you check the technology. You got to do very, very deep due diligence. There's so many scams out there. There's stuff like BitGert and there's stuff like, I won't mention other names, but they pretend to be real. They're not. Dig into the technology. It's all, fake. So you got to do that. Second, you got to check the tokenomics. Third, you got to study the founding team. They must have integrity and talent. You got to be able to trust them. If they lie or are dishonest, they're dead to me. Real simple. And finally, watch whale movements and token concentrations. and also calculate inflation. Check my avalanche video from a couple of weeks ago. I'll put it up that corner later, so stay tuned for that. Now, the other way to think about this as well, we're putting together a very simple way to explain how you should allocate your portfolios. So this is a simple, call it the token matrix. This type of methodology has been used for equities a lot in the past. But if you have on the left-hand side, you've got your asset, it could be Tesla or whatever else, or your token risk, you have the risk level between high and low. And on the top, you have your expected returns. Again, low and high. So if you want to get something that has low risk, it'll probably have low returns. And therefore, I say, who cares? It's like holding fiat. Not interested. Then above that, you got the most tokens, which are very high risk, very low expected returns. Yes, they may pump, but they are slow moving Ponzi schemes. And I proved it time and time again with numbers and data. Okay, so be careful. Now, the other interesting thing about these two categories is the people who pump them, their sentiment is typically grounded in their own bags. So people get very passionate when they own a lot of something and it's not performing well. So if you criticize it, you expose yourself to a lot of trolls. Trust me, I learned that the hard way last year and this year too. But I just to zoom out, I believe in honesty and numbers and quant, no emotions, and I'm not owned by anybody. Then on the right, they got the interesting section. So Salim, what you're talking about is the yellow piece here. We call this gambling. So, and if you look at the sweet spot, this is stuff with low risk and high return. That's where everybody should be focusing. That's what I spend my life doing, is looking for that sweet spot, the Goldilocks zone, whatever you want to call it. So imagine you have something that has an expected value return of doing a 3x this year or next year, and the risk is 1. If you are gambling, you're going into a higher risk token. You need to have exponentially higher return. That means if you have something that is 10 times as risky as something that's safe, like, I don't know, a Solana or an Ethereum, whatever, then you want to be able to expect at least 30x the returns to compensate, because there is a high probability it'll blow up. Take, for example, a venture capital model. They invest in 100 companies. They know 95 of them will going to shrivel up and die, but they are investing for that 5 that make it, and that 1 out of 100 that becomes a $1 billion unicorn. So think about that when you allocate. But I do think having 5 to 7% is too much, way, way, way too much. If I am ever doing a degen play, I'm like 0.001% of my bag, and it's only for experimentation purposes. As you guys know, I like to be heavily concentrated in high conviction names, and very few of them as well. So thanks for the question. Next question from Soulja Boy. Does Klaus Schwab creep you out as much as me? I do not follow Klaus Schwab, but we did a little bit of digging, and I have been talking about this. He has said some pretty creepy things, and I wasn't even aware. So, anyway, I'll share this with you guys. So this is the guy who says, he's very proud of his Great Reset narrative. The whole, you'll own nothing and be happy in the year 2030. Wow. But the creepiest things that really got the hair up on my back is, 1, the internet must be reformed. There's too much information out there. Oh, really? It's kind of like some of the European regulations right now. They're trying to regulate some things which are just crazy. We'll talk more about that in a minute. Then AI, he said, artificial intelligence will make humans unnecessary and useless. He also, one of his cohorts apparently talked about humans eating too much food and we need to reduce the number of humans. Don't know if that's valid or not, but there was a tweet about it. And number 3, this is the creepiest thing. C19 is critical because this is what convinces people to accept total biometric surveillance. But it goes beyond there. It's not just surveillance, a lot of other stuff. When they talk about the fact that population needs to be reduced, it is creepy as hell. Didn't know he said all these things, but yeah, absolutely creeps me out. So that's Klaus. Thanks for the question, Soulja Boy. Next question from Lee Clark. How do you control your emotions when trading? I feel nervous when it goes up, down, and nervous when it goes up. The only time I am not nervous is sideways movement. Well, this is very important. And as you know, we've done 4 videos around personality traits and what it takes to be a successful investor. The 5th installment is coming out next week, and we're going to talk about the profiles summary of not only great investors, but over 4,500 people completed our survey. Unbelievable. We're trying to figure out a way to get the individual responses back in a safe and secure manner because we don't share any data. Of course, we're not into that, but we didn't expect 4,500 people to complete the survey. But part 5 is coming out. It's going to be part 3 of the latest block that looks at a lot of data. We're going to look at the community, which is really, really amazing. All the different cuts you can go in, and talk about as well the playbook that you need. So one of the elements, a sneak preview of what we're going to do, we're going to dismantle traits that sometimes can hold people back from being really, really good investors as we go forward. And one of them is the feeling trait. That's the F in the Myers-Briggs. If I am an F, I'm a feeling person. How can I remove emotion when I invest? And this is the question you're exactly talking to. I always say I invest like a machine. I don't care what people say. I don't care what people do. I do my own homework and I go in hard. I took exceptional risk on the 24th of January and the 23rd and 24th of February. I literally put all my chips on the table all at once. I took on huge amounts of margin. If the markets went against me, I could have been wiped out. But I kind of did it because for me at this stage, it's about fun. And I have this little bit of a gambling gene, which is very, very bad. But looking at this, when you're a feeling person, they typically use their hearts as guides. They make decisions based on beliefs and values. And all of the top investors have the T, not the F. T is for thinking quality. Again, thinkers use logic and reason to make decisions. So basically, we're going to come out with a playbook of what you can do to shore up your gaps and get rid of that emotion. So wait this week. I don't want to give it all away now in this Q&A, but it's a sneak preview. Hopefully it'll be out either Monday or Wednesday. So we've been working a lot. And it's been also, I just want to say, Elon Musk talks about frying brain cells, building factories and solving hard problems like SpaceX. This for me is the hardest challenge that we have faced in the team. A big thank you to everybody behind the scenes. We have had 3 people working on this for a long time. So investing in crypto is easy, but helping people build frameworks and playbooks to shore up personality traits, unbelievable, very difficult. So next question is from Abrasive Justin. Every time I buy a stock crypto, the price immediately drops. Is reality a simulation designed to torture me? This is incredible. It's like everybody's now reflecting inwards, looking for blind spots as they go forward. So it looks like our series of looking at personality traits and what it takes to be a great investor is really working. So thank you for this question, Justin. So first of all, if you look at this whole blind spot awareness, this is the simple way of thinking about it. 1, you've got your hidden area, which is not known to others, but known to you. And then you have known to others, your open area, the red, and it's also known to yourself. And this is the tricky part here. This is the piece we're trying to help you understand more, is you're not known to self and maybe known to others, or not known to self and not known to others. Total blind spot. But we're really working on uncovering that. Now, it is not you, okay? Markets are very volatile. It's a blood sport, etc. Like I said before, nailing perfect bottoms is not easy, but it's possible. And follow macro. Research your assets hard. Have target prices. Use TA to find optimal entry points. And this is probably the most important thing. Don't be worried about short-term time preferences. The longer the time preference you have, the more things will work themselves out. If you have a solid conviction in things like, I don't know, Bitcoin and Tesla, my 2 biggest holdings, and I have extremely solid, like 99.x% conviction in those names, don't worry about what happens short term. Like I see, if heaven forbid Tesla goes to 400 tomorrow, I don't care because I know it's going to 1600. And it just means I got to get rid of other stuff and buy more. So when you have a longer time series and full conviction, you've done your homework, you're going to be just fine. The other thing as well that we proved with part 2 of our series, we looked at the legendary investors. They all like longer time preference. Time preference is the relationship to our composite score, and correlation is 46%, and the R squared is 0.182. This is critical. It's very difficult. There's very few investors that can just jump in and make money in an hour and then jump out. So you buying something and it falls, don't worry about it. Move on. But when you have high conviction and you've got time, be patient, wait for things to come to you, wait for things to perform. It will always happen, because what I say, gravity, the crap will fall away and die, and the good stuff will float to the top. That's just how it works. Okay, next question is from Fear Inoculum. My favorite album, by the way. Nice choice of a name. Under Luna UST-Anchor Protocol, ANC, it offers 20% yields, and everybody wants it now. But what happens when Anchor can't afford 20% yields anymore? Will it slump? Aha! You hit on what I've been subtly trying to talk about for a long time. First of all, is Anchor a Ponzi? Well, you could say that any token that uses token inflation to pay earnings is essentially a Ponzi in the truest sense of the definition. I always go like this. You reach back at the tokens and give them back to people, and they feel great. Look at me, I got great APY. So the second point is, if you can grow demand to outrun the inflation, the effects aren't felt until growth peaks. Absolutely critical. Peak capacity, peak market cap, peak whatever. Then it can fall in, and then it can collapse. And this is why I believe Do Kwon is doing what he's doing, and that's why I think he's going to buy today. Drop a comment below, you see if you want to bet me if I'm right or wrong. But I think before midnight Pacific tonight, he will buy more Bitcoin. Now, if you look at the inflation rate of Anchor, it's 46.15, and the stock to flow is 2.17. And I've talked about what stock to flow means. We'll talk about that. Bitcoin stock to flow is like, I think it's 57 years now. So anyway, and it's getting smaller and smaller. Getting longer and longer as it goes. So that's the first thing. Second thing, what Anchor pays today, you'll see here a couple of problems. One is it is paying 19.49%. But look at the green line and look at the black line. The green line is the deposits, because everybody wants their 20%, and nobody's borrowing. It's a 4x, so this means it's not going to make it unless something fast happens. So what they're going to do, they did make a proposal, and I don't really follow Anchor that closely, but they did make a proposal that they would be dropping the interest rate by 1.5% per month. Now, I don't know if that's a solid nominal 1.5%. It has to be for it to be liquid. Because when I project it out, currently they're paying 19.49%. When you take off 1.5% a month, in May it'll be 17.99%, June 16.49%, etc., etc. It'll take us down to a stable level in November, December, that 8.99%, 7.49%, where you can actually keep the whole token and balance the inflation and balance the growth and still give a pretty good yield. And that will be more in line with the yield on other stable coins right now. So that's what I think will happen to stop it from collapsing. But you're dead right. It's not sustainable. High APYs are not sustainable. I think there's a Hex coin that pays crazy huge APYs. Again, it's freaking Ponzi. So it's just math, guys. I'm not offending anybody or what they buy. It's just math. Understand it, and everything will be fine. So next question is from Awesome V. What is your opinion on Link's upcoming CCIP? Do you think it could solve the bridge hack issues, could lead to potential significant increase in adoption of Link? Excellent question. First of all, Link is already very well adopted, but it has inflation. Everything comes back to inflation. And we'll talk more about that in a minute. But let's talk about CCIP. This is Chainlink's cross-chain interoperability protocol. That's what I think CCIP stands for, and it provides a universal open standard for cross-chain communication. And the idea is really to allow these cross-chain smart contracts to utilize the service of different pieces of code from different chains, and this will enable, I think, the developers to build apps with capability on multiple blockchains. So the question is, when you look at the IBCP, it takes more of an internet relay approach, whereas the IBC process has packets of data and interprets them for sending and receiving. And of course, the IBCP is the Cosmos IBCP. So that's kind of where it is now. The big question is, could it solve the hack issues? Let's jump into this. First of all, the wormhole attack, or hack, and how it revealed a major problem with bridges. But it's not the only time there was a problem with bridges. That happened with Ronin, Axie, and a whole bunch of others, are all kind of flavors of the same thing. And I think there was another 2 hacks over the last 2 days as well. But the liquidity was supposed to be backing the ETH bridge over to Solana, and if the group, I can't remember the name of the group that put it together, but they funded it, it would have just dissolved real quick. Anyway, the CCIP does offer advantages by standardizing comms and shared inherited security. However, we don't know yet. CCIP may have its own vulnerabilities like contagion risk, and the CCIP is untested and not launched yet, so it's too early to tell right now. But it's a great question. We'll keep our eye on it. But again, Chainlink is one of those things where it's completely undervalued, but the price isn't going up because we believe there's too much inflation, of the tune of 38% inflation, I think, last time I checked. So that's the problem. That's suppressing price. So next question is from Anonymous. Will the EU regulation, if passed, scare centralized exchanges into blocking transfers to private wallets? And will it set a precedent for countries not in the EU? Yes, excellent question. Let's tackle this one by one. First of all, the EU Parliament did vote to pass the transfer of funds regulation, crypto transfers, to include information identifying the source of the asset and the recipient. Now, this flies in the face of what crypto is. Basically, we cannot trust you to hold your own crypto, and it's an invasion of privacy. In fact, CTO Larson said something very important, is that banks can be hacked. The Central Bank of Russia was hacked by Anonymous last week. If people in Europe have a lot of bags and they have to do the KYC information for wallets to be stored by banks, that will turn those banks into honeypots, and that will attract all the hackers from all over the world to identify who owns the most bags. Ta-da! Defeats the purpose. But there's more. So the proof is probably the most important piece here. The third part is the proof that EU regulators don't understand blockchain technology is because blockchain cuts out the middleman, and they're reinserting the middleman. It's like listening to, I won't mention any names, with some American politicians talk about crypto. That's the big problem. I think the traditional banks are just worried. So the next question is it going to stop crypto? No, it's not. We see this in Nigeria. We saw it in China. We saw it in Canada as examples. It's not going to do anything to prevent crime and money laundering at all, because most of that happens with fiat anyway. You'd have to be a complete fool to use the blockchain to, conduct money laundering. Plus, there's also not enough liquidity right now. So the only thing it does do is it makes it more difficult and more expensive for crypto businesses and companies to do business in the EU. So here's an example of what you can do. Go peer-to-peer and withdraw your crypto with multiple hops. We covered this before, how you can get around it. So don't worry. It's just regulators. They're so far behind, and they're just like, anyway, we covered that enough. So next question is from T-Bones. Would it be wise to convert equities to crypto for a 1% loan on Celsius to buy real estate? Goal is income rental and owning more Bitcoin or SOL. Interesting question. So flipping your equity bags into crypto, borrow against it, buy rental properties, generate perpetual income, and maybe buy some more speculative assets too. So first of all, the advantages, yes, it does have a lot of advantages over traditional equities. You don't sell your Bitcoin. You don't incur capital gains tax. Very important if you're in a tax jurisdiction that taxes you to death. Second advantage is you can fund real world projects to hedge your downside risk of your crypto investments. That's good. Celsius, I played with that as well. I use Celsius. They have different reward tiers with lower APY and premium rewards. There's also no paperwork. And, the SEL token is there too. That can gain value, and you can even pay off the loan with some SEL tokens too, we believe. And there are no automatic liquidations, but be careful. Make sure the risks are you must over collateralize and you have to give up your keys. So net, yeah, you can do it. I mean, the more I see the macro backdrop and the more I see the money printing continue and the currency debasing, the more aggressive I get over time. So think about it, but make sure as well, everything comes at risk, even investing in real estate. Next question from Anonymous. You're big on coins with deflation. As the number of coins decreases, say for Solana, will the price go up and cause less use of Solana blockchain? So clarification here. I do not like tokens with high inflation. Very, very important. So this is an example of Bitcoin, and we did talk about stock to flow a minute ago. Stock to flow is typically units in existence over units mined annually. Stock is 19 million. Flow is 328,000. It takes 56.5 years for it to create itself again, but it can never do that again because there's only 2 million tokens left. And I covered Anchor Protocol earlier. The stock to flow is 2 years because inflation is nearly 50%. So think about that. It's not deflationary stuff, but technically, if you ask me, I'll tell you Bitcoin is deflationary because so many people lose their coins all the time, and that is suppressing the price. I guarantee you more than 328,000 Bitcoins are lost every year. And you also have the miners hodling, so they're not even hitting the market, so you could assume very deflationary. Now, deflationary, is it equal to unusable? No, it does not apply to Solana. It is not deflationary. Bitcoin is arguably deflationary for the reasons I mentioned above, but it's not a smart contracts platform, and its usage should not be affected due to divisibility. Now, Ethereum is supposed to be becoming deflationary as it does a transition to proof of stake, and it'll make it hard to predict what supply is going to do. But Polygon is probably the best example because it has a fixed supply and is proof of stake. And we point out the risk. What happens if the staking pool runs out? Boom, there's an issue. And potentially much higher gas prices. But game theory and other variables make it hard to say exactly what's going to happen. So no, don't be concerned with that one. Now, this one is an interesting one, and it goes back to the psychology, the feeling, the fear, the different human emotions that stop people from jumping in. I treat it like a sport, so I don't care, and I just jump in. But this is from Anonymous. I was too scared to enter the market over the last 3 months due to Mr. P. I assume that means Jerome Powell of the Fed. I'm a long-time investor on the usuals: Bitcoin, Solana, Luna, ETH. Should I pop in now? So I'm not sure of the exact background of this question. Did you go completely to cash, or do you have some cash on the side to put in, etc.? So this is the most painful question I get is, I publish all my trades, all my positions, all my timing in real time here. So missing January 24th and Feb 23rd, 24th entries is not good because, we didn't know what was going to happen with Ukraine and everything else. But I know from time and history that buy the rumor, sell the news type of thing. Sell the news, buy the whatever way it was pretty clear that it was going to happen. It was pretty clear it was priced into the market. It's pretty clear the markets would tank, and I was waiting for that since December. So what I'm concerned about right now is many assets are up huge percentages. MicroStrategy is up 60% in 40 days. Solana's up 80% in 18 days. Bitcoin's up 35% in 40 days. So personally, from my perspective, I am setting up to start hedging positions as they run so much. I want to start taking some money off the table fast. That was always my plan for 2022. I knew it would be a seatbelt type year, but April will be good. I expect some good action in April, but come towards the end of April with some summer doldrums ahead, I will start taking some positions off the table and taking some cash off. So my point to you is, if you do get in, make sure it's for a short window. Don't have long-term plans because we could, not saying we will, we could go down again. There's still a lot of uncertainty out there in the marketplace. There's a lot of geopolitical stuff that could take us down. So be careful. Make with that as you will. But next time, when you see capitulation events or mini capitulation events, jump in. When the building's on fire, run into it. That's what I do. So next question is from E720. Later this summer, I'm quitting my job. Yay for you. And starting my own structural engineering firm. How can I use digital assets to help my small business? I love this. People not working for the man, people becoming financially independent, setting up their own business, hanging their own shingle. It is very rewarding, and you make your money. Don't have people make money off your back. So very proud of you. First of all, so many advantages for using crypto as a business. I don't even know where to begin. So this is we're going to go through this fast, but jot down what you think. First of all, you will be better positioned embracing crypto as a business. It is global. Give you more access to customers around the world. And the demographic group is typically younger, more technical, and has more disposable income. Boom, 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 win-win. It'll also enable access to new capital, liquidity pools, and real-time money transfers. And forget all the bank charges, etc. You can skip all those, which is important as a business to minimize your costs. And well positioned against inflation if there's a company treasury. So there's a whole bunch of stuff. You can accept crypto as payments. We've covered this many times. An option for customers to pay you in crypto. Use credit cards to get crypto credits as well, and a whole bunch of other stuff. We don't need to go back that. You can accept crypto payments. Is so easy with Now Payments, BitPay, Coinbase Commerce. Set up your own wallet in minutes and accept payments, and then you can store some in your treasury. You can hire with crypto. A rising, I think 60% of 18 to 24-year-olds would rather get paid their salary in cryptocurrency. They don't want fiat. So they see cryptocurrency as a smart investment. They believe crypto is the future, not equities, not fiat. And they believe in greater flexibility and a hedge against inflation. Cash is trash, etc. So many advantages. Also, it doesn't end there. You can hire freelancers and pay them in crypto. Crypto Grind, XBT Freelancer, Coinality. And you can hire a full-time employee at Crypto Jobs, Cryptocurrency Jobs, and Crypto Jobs List. So many places to get good people. In addition, you can actually drive a lot of customer acquisition with crypto. You can use branding to brand your business with NFTs. You can give away free NFTs to top customers or loyal customers. And again, you reach a much broader audience, and they'll follow the lines of all these big companies that are doing that with customers acquisition with crypto. You've got your NFL, you got digital Hot Wheels, you got your ASICs and Nike and all the sports brands jumping in on the game too. And you can add crypto to your treasury, like MicroStrategy and Tesla and Square and all our favorite names as well. And the list goes on and on. And you can also give back with crypto, like we did with More to Life and Tallycoin, and we donate to Sea Shepherd cryptocurrency. So again, the lists go on and on as to what you can do. The sky's the limit. Go for it. Next question from Anonymous. Thoughts on applying infinite banking strategy? It's a Wharton class. Hello, fellow Wharton classmate. Through cash value of whole life policy. Borrow strategy at low rate to reinvest, and it's used by the wealthy. So first of all, for those who don't know what the infinite banking strategy is, this typically is a simple example of it, but it is a process which an individual becomes his or her own banker. And the concept was created by some guy called Nash. And he talks about the use of a whole life insurance policy that distribute dividends. The problem is it no longer works because we are in a very low interest rate environment. You can't just buy a $100,000 whole life policy and collect 5%, 7% per year. It doesn't exist anymore. And in addition, the idea, I believe, was originally put together to help promote the sale of whole life insurance policies. I could be wrong, but it just doesn't really work. Now, if you do buy the whole life, you have to. The catch is you have to buy the policy and fund it, which requires a lot of money. It is a marketing gimmick, in our opinion. And if you want to be your own bank, just go with Bitcoin. Probably one of the easiest questions we got today. But remember, as I always say, anything that's marketed hard, pushed hard, sounds too good to be true, it's not a good product. Good products sell themselves. And in the final great news of the day, we have 2 new babies, giraffes. We got Twiggy. She's a girl. She's an orphan giraffe that was found trying to survive by herself in a herd of zebras. I guess, talk about sticking out with a sore thumb. And now lives happy in her sanctuary. And we have Kiko, who was an orphan giraffe born in an area bedeviled with wildlife conflict and everything else, but is now safe and sound. So big thank you everybody last week for those cool donations. We make a little bit of difference every day. So let's switch cameras and go to the questions. We're going to do some top questions. Let me see. Pull them up, and big thank you as well to the mods for managing all this. And it's all the usual team. Dragon Rider, how are you? When I see SOL, ETH, Bitcoin, ETH, and other trading charts not against USD, I feel like I suddenly go brain dead trying to calculate value. Why is it so difficult to grasp, or is it just me The problem is, like all of us have spent over 15 years denominating things in fiat currencies, it's very difficult to break that way of thinking. It's like turning what I used to do years ago. An example, I used to translate the cost of commuting with a car, paying for parking, paying for gas, time in traffic, versus the benefits of riding my bicycle. And I took it back to the amount how much I could spend at Starbucks every day on coffee. so so I turned my commute time, gas prices, mileage, time, etc., into cups of coffee, and that was kind of fun. So take something like that and then pivot it, and then when you look at your charts, you got to make sure you have that inverse relationship. One of the ones that I have been looking at a lot recently is the Bitcoin to Solana, the SOL to Bitcoin ratio. It typically, I did do that swap a while back at 0.0022. And for people in the audience as well, I did say I got to cover this because I did say I'd never sell my Bitcoin, but I bought a Bitcoin and then flipped it immediately. So technically, it was an experiment. My Bitcoin bag is untouched. But if I buy something at, I think it was 38K, I can't remember, 37K, and then flip it directly in, I don't incur taxes. And I just did that as an experiment. So not selling my Bitcoin, but again, looking at the chart, the long-term chart, and looking at the lowness of the SOL to Bitcoin chart of 0.0022 is like, whoa, we are way, way, way oversold, at least as a comparison. So I thought, logically, it's only a matter of time before it goes up again. And it did. So, and currently right now, actually, if I look at the chart, let me see, pull it up. Yeah, the SOL to Bitcoin is 0.0029. So it's gone from 0.0022 to 0.0029, which is actually a big move up. Let me calculate that exact percentage as well. I can't do it right now. Juggling too many things. But just take other things that you spend on and translate it back, like a cup of coffee, like a lunch, like a tank of gas, like your rent, utilities, mortgage payment, and then convert that. Another simple one is take your salary after tax and then compare it to your property taxes, your mortgage payment, and create those multiples. And once you have that way of thinking, then you will be able to do the same thing by using Bitcoin as a denominator for everything that you do. Thank you for the question, Dragon Rider. Remy the Whippet, thoughts on Airweave? Deep dive into AR this week, and ETH gets on board alongside SOL and choose AR as its permanent storage solution. The demand for AR will be insane. Also, SOL to 650 NFA. So the problem with Airweave, let me pull up the compendium real quick. We have looked at it, and let me pull this up. Just like anything else, the tokenomics are not that bad at all. Compendium score is not that bad. The inflation is around 17%, but it is very heavily centralized, and a lot of dumpage will happen over time. And the insider distribution is horrific. Over 80% is held by insiders, which we don't like. So from that perspective, it's like, why do it? But why buy the storage solution when you can't buy the original L1 itself? And that's always my thesis. So let's look at the Airwave chart as well. I haven't looked at it in a while. And CryptoWatchist. Airweave on Binance. 1 year. Yeah. It just doesn't look interesting. Hasn't moved, and that's probably due to a combination of factors. But again, like, I would not be buying the company that makes the tires for Tesla, or the company that manufactures the glass that goes inside of Tesla. I just buy Tesla. Always go for the original and not the periphery things as well. So I do believe, yes, the requirement will be insane as it goes up, but so will I think the appreciation of the price of the non-exterior utilities. The interior ones will be much more valuable over time. Bat Pangolin, are you worried about yield curve inversion? It's precipitated every recession since the 60s. Yeah, so I keep getting this question. My take is probably a little bit radical. First of all, when you look at MMT, the modern monetary theory, interest rates are kept artificially low. It was only a matter of time before yield curve inversion was going to happen because the bond market's broken, money markets are broken, everything's negatively yielding. You deposit money in Switzerland, they charge you. Everything is just broken. And the problem is the debt is so high for so many of the fiat-backed currencies, the fiat currencies, that if they do increase interest rates, they reduce their GDP. So they have to keep the money printing going and rates artificially low. And that's the problem. Just the bond market's broken. That's it. So in terms of will it precipitate a recession, I think, it was a few months ago I was talking about stagflation, which is slower economic growth, negative to low for 1 quarter, maybe 2. And that 2 quarters of negative growth is a recession. But I think they'll probably put the skids on it by increasing money printing, slashing rates again, and getting right out of it. Because politicians need to keep in power. They need to keep on printing money. They need to keep everybody on UBI, etc. So everything is just broken. That's why we need Bitcoin. So if there is a recession, yes, it'll be short-lived. Yes, it'll be in the next 4 to 16 months, 4 to 18 months, somewhere about that time frame. But we had these types of things happen before, and it'll just be a short-term thing. As long as you're in assets anyway that can survive a recession, things like Tesla, there's a 1-year wait for their vehicles. You're gonna be just fine. So let me see. IROC 007. Hydra is 1 million TPS. Should we have some ADA? Dot versus Atom, no max supply versus Avalanche, which is the most promising layer 0, since bridges don't work. Yeah, so I talked a bit about Cosmos and Polkadot on the CTO Larson video, where he asked my point of view of the top 25 cryptos. And Hydra, 1 million TPS. They said by November. I've never seen a layer 1 go from 1 TPS, which is what they currently run at today, to 1 million. So the Hydra, multi-headed snake or dragon or whatever it is, I don't see it happening. And I think there's just many, many other problems with that chain. So no, I would not be buying Cardano. Sorry, Cardano Army. I think there's better ones out there. It's just go from 1 to 1 million. It's unheard of. And I actually asked CTO Larson that exact question, and he said, "Yep, you're dead right. It's not going to happen." So, and I'm a betting man. Who wants to take a wager on that? I'm willing to bet. So, and in terms of the other ones like Polkadot, Atom, according to all our metrics, our SCP profiler, there's better ones out there. And you guys know my top 5. And bridges can work. I think it's just very early days. So hope that helps. Mason Vieira, are you currently stacking up cash and waiting for the next big correction? Do you believe it's straight up from here? No. I think 2022 will be a bumpy year. We've had huge moves. Never in my wildest dreams did I think we'd move so fast, so quickly since the 23rd, 24th of Feb. It's been very good, but I've learned that sometimes not taking profits fast in this type of market can be bad. So I will start moving into more cash position right now. But I'm waiting for things to top out. I nearly hedged Amazon last week, but I got too busy. But things like that I will do as we go forward. But I am still fully deployed in the markets. And I do believe April, don't want to jinx it, but could be good. I've been calling for a 50K Bitcoin in April for a month now. Now the rest of the world's calling for the same thing. So we'll see what happens. I think we should hit it, especially if there's a big LFG buy tonight. Watch this space. I will tweet it if it does happen. Let me see. Crypto Poppy, when will OTC buying start affecting Bitcoin price? Why hasn't the supply shock had effect yet? It technically does. If you look at the OTC supply right now, it's draining because LFG has been buying a truckload and has put a huge dent in the supply on OTC markets. Now remember, the OTC markets need to be fueled by the spot markets. So when, say for example, Coinbase gets a big order of 100,000 Bitcoin, or whatever it is, $1 billion worth, 125 million, they need to start siphoning it off at a pre-negotiated price from the markets, and then they stick it aside, and then they deliver it in one big package. That's why it's very difficult to do what Do Kwon's doing right now. 125 million every 2 or 3 days, or sometimes every day, has a huge effect. So anybody that watches the on-chain metrics, the OTC supply, and the long-term supply, people are holding much longer. whales between 100 and 10,000 Bitcoin are growing. I covered that yesterday as well. It is trickling in. That supply shock is there. And anybody that knows how to read on-chain metrics will see it, and they'll get that FOMO to jump in, especially the institutions that need to buy right now. So let me see. Hope that helps, Crypto Puppy. Twill line man for hire. Can you please have Cliff High on? I don't even know who Cliff High is. Let me see. I tend to stay in my own little bubble, so Cliff High. Who is Cliff High? Yeah, he looks like a funny fellow. If it's the same guy. Let's Cliff High, Silver Loves, let's go, Breton. I don't know who he is. I'll check him out. Thank you so much for the tip. OZ. By the way, I only pick people to interview on the channel where we have a lot of synergy, aligned beliefs, and that it would be helpful for the audience. So that's kind of our mechanism for choosing people. I will research Cliff High after this. OZ, what is your snipe price for Tesla? Is there potential opportunity with Fed meetings, war, inflation, yield, inversions, recession, etc. go in hard? I mean, we had so much opportunity. I did short Tesla at 1200, and I layered back, covered those shorts. I can't remember where it was. Probably early January, probably too early because we fell all the way to the 700s. Right now, I think we're bumping up against 1100. I do think Monday there will be some softness in the market because the market's used to Tesla blowing numbers out, and they were just beat them, but only slightly because they had to close down Shanghai for 6 days because of C19, and that's been a big problem. So I think there might be a dip tomorrow, maybe $60 down to 1,020, 1,040, and then we'll see. But everybody knows it's worth 1,200 to 1,600 bucks. It's gonna hit 1,500 at least this year. So who would be selling? I don't know, but something can happen. There can be something that knocks the markets down. I just say, be ready. Again, my entry position, 750 to 850 still stands. You may have to bump that up to about 900, but I wouldn't be buying over 900 because typically, knowing Tesla so well, it has very high volatility, and it does swing quarter to quarter. There can be a week period of time. All it takes is a couple of downgrades from a big investment bank, and there you are. Wheezy F Crypto, thoughts on a wheel strategy for options, CSP and CC? Yeah, that can work, but I found there's better ways, faster ways. Like, I prefer synthetic longs myself. Wheel strategy does work. I used to do a lot of put selling, but I always kicked myself because every time I would sell the puts, I typically sell them on really, really fast winning names. What was the one in 2020 that I could never catch? I think it was Shopify. I kept on selling puts in Shopify, and it kept on going higher and higher. So now I just prefer selling a put and then buying the call, and that way you get both sides. But make sure you only do it when you nail the bottoms. And a big thank you for your donation as well. Dog One, David W, JM, Peter Wilson, Kryptonite in my pants, T&D Tesla, Wixley Snipes, Grubbins, Bombiggy, Anson Management Corp, Bob, Artem Kopono, Robert Stefek, DJ Jake 78, Crypturelia, Fernando Enril, and St. Jude Needs Us. Thank you, everybody. Now it's time to go vegetable shopping. Love you all. See you soon. Oh, BDB, thank you again. I hope that I got everybody. A big thank you to the moderators and everybody out there. Appreciate you all. Hope this was helpful. Hope you all learned something. Bye.